Welcome to the mining news flash at Commodity TV. Osisko Gold Royalties entered into an agreement with Investissement Quebec, a well-known Quebec institution and long-term supporter of Osisko, for a non-brokered private placement of over 7.7 million common shares of the company at a price of 11 Canadian dollars per share. This is without any fees, so it is more likely that the price is like $11.50. After the closing, will Investissement Quebec hold 5.04% of the issued and outstanding shares of the company. This is a big sign of trust, ladies and gentlemen, and gives Osisko another great anchor shareholder with a long-term view. Canaccord gives the company a buy rating with 16 Canadian dollar price target, and Haywood gives the company even $19.50 Canadian price. Terra Resources announced the results of 5 holes from the winter 2020 drill program at Sam Otto. This drilling is designed to test the previously undrilled zone between Sam Otto main zone, its southern extension. All 5 holes in the connector zone intersected gold mineralization outside of the current 43101 inferred mineral resource estimate from 4th November 2019, demonstrating previously suspected continuity of the Sam Otto zone. Highlights showed 1.06 grams gold per ton over 12 meters and 90 and 1.63 grams gold per ton over 7 meters 25 in hole TSO 20063, and almost half a gram gold over almost 42 meters, including 1.7 grams gold over 5 meters in hole TSO 20062. To date, Terra has released 8 holes out of 34 holes drilled this winter, with assays still pending, which means a lot more news flow. The company has recently completed 9,715 meters of drilling at Sam Otto, ahead of time and, even more important, ahead of budget, meaning lower as the budget was planned. Prior to exiting the field for the season, Terra will complete 2 deep holes on a new high-grade target generated from surface samples and induced polarization, which are anomalies resulting from the winter geophysical survey currently being conducted. Caledonia Mining noted the announcement by His Excellency President Mnangagwa on 27 March 2020 of a nationwide lockdown of Zimbabwe to restrict the spread of COVID-19 infections. In terms of these regulations, all commercial activities other than essential services must suspend operations from 30 March 2020 for a period of 21 days. Although the Zimbabwe authorities have confirmed that gold mining is not an essential service, Blanket is currently permitted to continue with its operations, as the authorities will grant exemptions for businesses which demonstrate they can operate in a manner that contributes to the management of the spread of COVID-19 infections. The Blanket mine has applied for such an exemption because Blanket and its employee village can be quarantined from the surrounding area, and Blanket will reconfigure its operations to reduce the risk of infections being transmitted amongst its employees. This will reduce the number of employees who can work underground and will result in daily production running at approximately 70 to 80% of the target production rate. Blanket is permitted to continue operations at a reduced level until its application for exemption is dealt with by the authorities. Cash on hand, and that's very important, at 25th March was $12.5 million, following a strong production in the first quarter of 2020 and the higher gold price in 2020, of course. The quarterly dividend decision for payment was deferred to get a better overview on the situation in the coming weeks. Thanks for watching us, and bye-bye from Switzerland.